Good morning, everyone, and welcome to today's webinar, Beyond Lease Accounting Compliance, Creating Efficiency and Value. Before we get started, I'd like to go over a few items so you know how to participate in today's events. First, we are recording this webinar and will be made available within the next week or so. We have muted all lines to reduce background noise. You can submit questions by using the question pane in the control panel. We will collect questions and address them during the Q&A session. Attendees are eligible for 1 CPE credit. You'll need to participate for a minimum of 50 minutes, respond to 3 or more polling questions, and answer the post-webinar survey, which should go out about 60 minutes after the webinar completion. And then we plan to email certificates within a couple of weeks of the webinar. With that covered, we can go ahead and get started. So my name is Paul Little, and I've been with CoStar for over 3 years, and I manage our strategic alliances and partnerships. If you're not familiar with CoStar, we are a billion-dollar public company and are the leading provider of commercial real estate, information, analytics, online marketplaces such as apartments.com, and lease management software. So I work on the CoStar Real Estate Manager division, and we've been assisting small and enterprise companies manage and report on real estate, equipment, and other leased assets for over 20 years. We offer the market-leading SaaS solution for lease administration and lease accounting and have hundreds of successful implementations. We fully support the new lease accounting standards under ASC 842, IFRS 16, and GASB 87. Now I'd like to turn the floor over to Shauna Watson from RGP so she can give you an overview and introduce the speakers that we have today. Shauna, the floor is yours.
Thanks, Paul, and welcome, everyone. I appreciate you joining us today to learn about lease accounting and even beyond lease accounting, efficiency and value, which are 2 topics that are very close to my heart and probably all of yours as well. Once you get past the compliance part, you say, well, what's next and how do we really optimize the investments that we've made and make things better for everyone? So as Paul said, I'm Shauna Watson. I lead the technical accounting practice at RGP, which of course right now is heavily focused on lease implementations. RGP has done over 250 lease projects for clients, and it includes about 120 software implementations as well. And we're pleased to be a partner with CoStar, one of the market leaders in these enterprise lease accounting software solutions. So very happy that we could co-sponsor this webcast today. First, I'd like to introduce our panelists. John Devine is at RGP. He leads our business technology group, which obviously is focused heavily on lease accounting software right now. He has a very long career, well, not very long, he's still very young, of course, a 20-year career with various management positions at Qualcomm and SAIC, where he's been involved in implementing accounting change as well. And then we also have Matt Waters from CoStar. He's a former lease accounting manager with Home Depot and American Tower, and he is CoStar's lead subject matter expert on the technical aspects of the standards. So pleased to have both of them with us today. Thank you guys for joining us. To get started, I think we're going to do an overview to kind of level set where we are with kind of the adoption in general. And first, you know, we have the public companies that have been working on this. The public companies have, if their calendar year ends, they have already adopted and reported their first quarter. Of course, there were some early adopters as well, and we saw some information come out from them and some comment letters and such. Then private companies get a 1-year delay, and it's a little bit difficult to think about the private company time frame because the cumulative effect would be recorded at the beginning of the year, but the reporting isn't required till the end of the year. So essentially, private companies have about 1.5 years, if they're calendar year-end companies, to really do their first reporting. Interim periods, if private companies report for interim periods, would be the following year. And so that can, of course, cause some complications with the presentation under the different standards. But that's kind of what private companies are working through right now. Early adoption, of course, is allowed if you're at that point. I'm not aware of too many companies that ended up early adopting from a private perspective. You know, there were a few that I mentioned, but a lot of companies that wanted to realized that with the amount of work and the data collection, it just really wasn't going to be possible to do an early adoption. Most of the companies I've seen, actually I haven't seen any that have done a full retrospective or a modified retrospective approach. Most of them have been recording the effect at the date of adoption and then doing the required disclosures related to that from the 5-year table. There's a lot of practical expedients, even a few more for private companies. The package of 3 has been very popular. Most companies have elected the practical expedients related to identifying leases, classification, initial direct costs, where essentially you wouldn't have to reassess any of those under ASC 842 if you already had done it under ASC 840. The use of hindsight has not been very popular. I haven't seen anybody use that one because it ends up being a lot more work since that has to be applied to all leases. So that's a little bit of an overview. Late breaking news, however, is that there's talk of a delay, and you know there's always talk of delays in standards. This one might actually have some weight because Russ Golden, the FASB chairman, announced at the IMA's annual conference in just about last week that the overall theory of how they are applying private company implementation dates versus public company implementation dates may be changing, and they're going to have a meeting on it on July 17th. So this would affect all standards that weren't adopted yet, so CECL and hedging and insurance and leases as well, assuming they get it out in time. You know, these things always have to go through a process, so typically the FASB will discuss it, then they'll direct the staff to create an exposure draft, and then they will expose it to the public with a comment period of varying lengths, typically about 60 days. Then they will redeliberate and ultimately issue an ASU, some sort of a rulemaking if they determine they want to go that route. So we'll see what happens. You know, initially they originally had private and public company implementation dates the same. Then they started delaying public company, most standards, public company implementations by a year for the annual periods, and then an additional year for the quarterly periods. And so now they're saying because it would be better for private companies to be able to look at the public company comment letters and such and the audit results, maybe 2 years is the right time frame to implement the standards. So we'll see how that goes. I think that brings us to our first polling question, Paul.
Great, thank you. So let me get that poll going. There we go. Should be popping up on your screen. And Shauna, maybe if you want to read that off while I'm gathering that up, if you don't mind.
Sure. And the question is, which of the following best describes your company and the status for ASC 842 lease accounting transition? The first option is a private company working on the transition, public company with late reporting and working on transition, public company already successfully transitioned, public company that is experiencing trouble or failure to transition. Now, note that these results will not be sent to the SEC or any auditors, so don't worry about being completely honest on this, but hopefully not too many in the last bullet there. We'll give you about 45 seconds or so to answer that, and in the meantime, Matt, I think I might ask you, are you seeing private companies starting to get working on this already, or do you think that there's enough leeway and enough runway for the implementation that private companies haven't paid attention to it yet?
Yeah, thanks, Shauna. Yes, we are seeing some private companies already get started on this. I think that's really a smart move just from what we've experienced with the public companies at the earlier deadline. So many said they wish they had started earlier, and majority, almost unanimous across the board, we hear that they wish they had taken more time and allowed more time for the data collection process. And I think a lot of the private companies are learning from that experience and going ahead and getting started. And honestly, we're seeing people in all of these categories, even unfortunately some that had some trouble with their first round through and now looking for a little more robust solution to put in place.
We just closed the poll and should be sharing those results. It looks like there is a little bit of a delay, Shauna, I think for some of the attendees.
I can see them now. I can see them now. So it looks like 49% of the attendees here are private companies working on transition. A few public companies with late reporting that are working on the transition. A few that are successfully transitioned. 40%, which is awesome, because that's really what the focus of today's webcast is optimizing, once you have met that compliance, that initial compliance, how do you go forward with making it even better? And then public companies experiencing trouble or failure to transition. And we certainly are seeing that. Some of it, we have public company clients that maybe didn't implement a software solution or implemented a software solution that didn't work well for them, and or are having trouble getting all the data they're needed or getting through the audit process. So certainly there are problems that come up, certainly not insurmountable, I hope, but definitely room for improvement. So with that, let's go through the agenda real quick. We're going to cover today how to develop a successful project plan, how to create process improvement, evaluating the essential system requirements, which of course is key to making sure that you select the right system for your business needs, anticipating implementation challenges. These will really be some of the lessons learned from the public company implementations, and then driving value past implementation of a software and implementation of your compliance solution. Okay, so John, I think I'll turn it over to you to get started at on the successful project plan development.
Great, thanks, Shauna. I appreciate it. So hi, everyone. John Devine with RGP. Pleasure to talk to you today. So we're going to jump into two of those topics Shauna mentioned, the project plan as well as some of those process improvements. And so before we jump into those in detail, just wanted to level set on for an initiative like this, what's really involved. And there are four really key components to, compliance as well, to your lease initiative. Those first two kind of being around the policy assessment, getting an understanding of how those policies are impacting your organization, what they're going to do. Obviously, whether it's IFRS, ASC 842 or GASB, how are those new compliance standards going to impact all your policy decisions and really what gaps you may have from a process perspective or even controls perspective under the new guidance. So really, a lot of activity involved around assessing kind of how those policies are going to impact your organization. And that starts to feed into kind of those process transformations, whether that's handoffs between teams. If you have a real estate team and an equipment team that's kind of managing some of your portfolio, how do those handoffs happen today, and how do those handoffs need to improve in the new environment? Because as modifications happen and those leases change, you're going to want, from an accounting perspective, a little bit more insights into that, and we'll touch a little bit more on that later. Another big component is kind of data. You've heard it mentioned already, and that's what we're finding a lot of clients kind of struggle with, is really how to tackle that data component, and we'll get into some details on that. And then lastly, that fourth leg of the stool, from a technology perspective, is technology something that you're planning to leverage as part of your endeavor? Is your portfolio large enough to justify an investment in that area? And we'll get into that a little bit. So these are kind of the four areas that we'll touch on today, and let's jump into kind of the components, some deeper level components into each of those. So with any project plan, this is just a way to kind of organize your thoughts around as you're planning moving forward. That first one being getting some governance in place, making sure that you've got a team established, making sure you're aligned on what those objectives are. We're going to talk a little bit later about processes and how that's touched and all the number of people involved. making sure you're involving the right stakeholders out of the gates is pretty important as you set up your your governance model moving forward, whether that's the real estate team in addition to the accounting team, any third-party providers that you may have that are involved that you want to involve in this process. Just making sure you have that governance and the right stakeholders. And that starts to touch on who's assigned to do what. When you have third-party people involved that are doing some of your lease administration, making sure you understand what their role is and what you may have gaps in from a data perspective. So then that takes us to assessment, working through all those components. A lot of policy decisions to make as you go through your assessment process. Not only is it policy, it starts to touch on getting a feel for completeness of your portfolio. So lease identification, how you're going to identify leases on a go-forward basis, what that process may look like, which starts to feed into design a little bit. As you mature your understanding through that assessment of your policies, what does that future state process start to look like from a design perspective as you start to uncover what's happening within your organization today in terms of that assessment, what things might need to change in the new world with, lease modifications and termination notices and things like that, things that accounting may need to have insight into now that they didn't need to before. And so as you're going down that from a system selection, if technology is going to be in your part of your decision process, set some time aside to go through that system selection process. It can be a long process when you include, identifying the vendors you want to work with from that, from an RFP perspective. If you have an organization that has to go through that RFP process, assessing them against the requirements. Now that you've gone through the assessment and design, you should have a good short list of what your requirements are to evaluate your vendors on. And then making sure you compile that scorecard so you can do an objective evaluation, but also set aside some time at the end of that for negotiations. So system selection is something definitely you want to think about from a project planning perspective. Data collection, you heard it before. You'll hear it again many times in this. Make sure you set enough time aside for that data collection. Assessment should hopefully tease out completeness around maybe some of those service arrangements that are embedded leases. You've identified those, and data collection really is going to focus in earnest on organizing the latest active agreements and making sure we're abstracting the information needed for software deployment. Which brings us to our last bullet, that deployment. This all leverages a lot of the decisions you made around your policy, what your new processes are, making sure you have that defined up front so we can quickly get through the requirements phase and that design from a software perspective. Each provider has their own strategies on how to document your decisions around how your discount rates are going to get incorporated into the tool, how your treatment of leases from a portfolio perspective or non-lease components, all those things you're going to want to document up front. Then when you go to configure the tool, it's pretty streamlined and easy to do. So making sure you set aside some time for deployment. So how does this all look together from a plan perspective? What does this start to look like from a timeline and what key dependencies there are? So Paul, let's go to the next slide. So this is just a sample timeline. There's certainly projects can be longer than this. They can be shorter than this. The main thing we want to share with you is that there is a relative natural progression of things that feed on each other to help, and we're going to touch on some of those key dependencies. One of those I mentioned earlier is that governance model, that making sure that you've aligned on objectives out of the gate. You don't want that to happen later in the project, whether you're in the middle of a deployment and real estate gets brought in to discuss, lease administration activities. You want to make sure that that's, a level set out of the gate, because as you go along this path, you want to make sure you're gathering those requirements. So having those, project objectives laid out at the outset of the project is really important. Make sure you have the right stakeholders involved early on enough. And then as you jump into policy in your portfolio assessment, that allows you to be a little bit more focused and diligent on what is it about your portfolio that's unique, what policy decisions that you have to make, so building on that. And that starts to feed into those business requirements. So as you learn the standard and get to know, what's happening today in your environment as you're progressing through that policy and portfolio assessment, before you jump into system selection, really have an idea of what your core business requirements are for meeting some of those objectives. Like if you're going to tackle administration in addition to accounting policy, you know, things beyond just compliance, really start to understand what your needs are from an administration perspective, what your third-party providers are doing for you already, what additional information you may need to augment based on what they're doing as part of a tool or an implementation. So taking that into account. And that starts to feed into, as you progress down your policy and portfolio path, you'll start to, you know, get a little bit more fine-tuned on your completeness. It's going to take some time to get there. You'll probably potentially have some strategies around how to do that, but really getting to completeness before you jump into abstraction, as we were talking about a little bit before, making sure you have an idea on what potential service arrangements there may be that are exposed that you're going to want to do data collection on, making sure that you've got that gate checked off from, that's a kind of key area, is making sure you've got at least an initial pass on what you think is a complete portfolio. It never truly ends per se. We're all kind of down this path of continuing to ingrain this new process into, but you kind of want to make sure that you've got at least a kind of a stake in the ground from a draft perspective that, hey, I feel pretty complete about our portfolio. Here's our areas of exposure before you kind of jump into a deep dive on data abstraction. So as we enter into data abstraction, you're kind of going through your system selection process, you can begin to start to assemble your leases. You know, as the policy and portfolio assessment starts to come to a close, and you've kind of got your line drawn on all those key decisions, such as you know, non-lease components. What are you going to do for compliance purposes? Some people are tracking that, some people aren't. It's kind of about what you're doing. If you're looking to drive payables from your system, you know, that's a different type of extraction effort than it is if you're just looking to get the minimum lease payments related to an asset. So if you're looking for some of those maintenance costs and things like that as part of your process, having those decisions as part of your policy and portfolio assessment before you get in earnest into data abstraction and start, you know, hitting all those leases, you're going to want to know some of those decisions out of the gate. So really making those policy decisions before you jump into in earnest data abstraction is super helpful. And that gets us to number 5, you know, system design before you jump into a deployment. You know, obviously you've gone through that system selection process, you have an idea, you've completed your policies, you have an idea not only from what you need from a compliance perspective, but those administration requirements as well. Making sure that you've got all that, you know, at the ready so that when you jump into a design session with your selected provider, that you understand what those requirements and what's involved there. And then lastly, integrations. Not a huge dependency here, just wanted to highlight this is, you know, focus on, you know, from a deployment perspective, if you're jumping into that, you know, focus on the core of what you need, those administration and lease accounting tasks, and then work to do integrations later, whether that's an inbound integration from a third-party, you know, lease administration tool, or that's an outbound integration to GL or AP or AR. You know, try and tackle those as a kind of a phase 2 to your overall program. And they can be incorporated. I've kind of showed them overlapping here, and they can be incorporated into that, but just making sure you're getting to, you know, the bulk of what you need out of the gate quickly and then maturing the solution from there. All right. So getting to process. This may look familiar to you today. I would say it's probably more organized than what I'm accustomed to from what the existing processes are, but what we're trying to depict here, there is a large number of people involved in the lease accounting process today. You've got third-party providers, you've got your lessors and your finance companies, your legal team, your fixed assets team for those capital leases. Operations is doing, you know, their own thing, whether it's business units or operations or plant operations, managing their equipment. They all have their Excel spreadsheets, and then AP. So you've got this environment today that's, you know, spread across a number of organizations and a number of teams. And, you know, prior to this new standard, it wasn't really important to, you know, people would track them from an OpEx perspective. Certainly capital leases track that. It just wasn't as important as it is now. So how do we kind of assemble all this information from all these disparate parties? And what areas can we take on? Let's jump to the next slide, Paul. So really, what we're finding is if you can get those individuals working off a common operating platform, it's really going to enable you to, you know, get things not just from a compliance perspective, but gaining more value from your platform. You've probably heard it from IT folks in the past in terms of one source of the truth. Having one system that provides for a common lease repository is going to be able to leverage a lot of things, whether that's the real estate team and the accounting team working off the same data set, right? Having that common repository is going to create significant value for both. That's also going to, having that common platform also helps the accounting team enforce those policies that you want to drive throughout your organization. If you've got a pretty decentralized organization, that you've got to make sure people are using the right discount rates and ensuring that accounting schedules are approved across the organization before journal entries are posted, that adherence to some of those principles, a common platform can help ensure that. And obviously, you're going to get the benefits from a consolidated reporting perspective. And that's not just for your right-of-use assets. That could go for things beyond that in terms of, those leases that are below the materiality threshold or leases that are less than 12 months. If you want to put that in the tool, you have the ability to do that. And this is also an area from a payment perspective, making sure that, working off this common repository, we've got real estate working off this repository, what's getting paid out at the end of the day, from that same repository can be driven through the payables, ensuring that your payables team is actually paying when those step payments get triggered, year after year, that they're paying the latest up-to-date per the arrangements, or when payments should end, they're not paying leases that have ended or terminated. It obviously, in some of the other benefits that we'll talk to later, is basically the ability to manage sublease income for those areas that you may have it, looking to that on a common platform, being able to not only track, the right-of-use asset, but that offset from an income perspective, what's happening there, as well as working in this platform. If you're able to achieve lease administration and lease accounting work in a common platform, it's going to increase that visibility early on into the process, because the real estate teams and equipment teams are going to have a little bit more visibility into what's happening when assets are being retired or terminated, when new assets are being brought or new leases are being brought onto the books. They're going to have a little bit more visibility. So if you can put in a platform that allows the accounting team to have some of that visibility, they can act a little bit quicker and react to some of the information they're receiving. And that gets to the workflow component of it as well, that just kind of supports that whole process. Okay? All right, that brings us to our next polling question.
Yeah, so there's a little bit of a delay, John. If you don't mind reading those out, and I'll get the poll launched.
Yeah, happy to. So what is your company's status for selecting a software system to manage data and perform ASC 842 accounting calculations? Do you already have a system that's already up and running? Have you identified some options, kind of your short vendor list, and you're kind of just in the evaluation process? Or you're just kind of looking new to the marketplace and looking? Or you think Excel is going to be sufficient to meet your needs?
All right, so we'll give you a few minutes, or a few seconds rather, to answer that question. Remember, you need to answer 3 of the 4 to get your CPE credits. When you're thinking about this, and thanks, John, for that great discussion of all the process improvement in the plan. When you're thinking about the software, as John mentioned, make sure you have the requirements. And we've certainly seen some companies who have implemented one software and then decided it didn't work for them, either because the software didn't work at all or because there was something that a stakeholder needed that the software didn't provide. Maybe the level of detail or an integration or something like that, that essentially made them have to reselect another software. And clearly that adds a lot of time and cost to an already somewhat onerous process. A couple other things to think about based on our experiences. It does take time to negotiate these contracts too, so you want to make sure you leave yourself plenty of room to not only do a good job at the requirements building, also to select the software, get the demos, and then negotiate the contracts too. Now, as John had said, data is definitely the part that takes the most time. Gathering the data, validating it. The actual implementation or configuration of the system is really not the longest time. It's really about the data and getting it in the right format and validating the results. But before that, of course, comes the policy decisions, and that's really where, depending on the policy decisions you make, the practical expedience that you select, and the scoping you do can really make a difference as to how much time your implementation takes. So I think scoping is probably one of the most important things you can do up front. Scoping about which leases, what is a lease, scoping for materiality, and even scoping about what you want to put into the system versus what you want to track outside the system. John had mentioned short-term leases, immaterial leases, and even embedded leases in some cases. So things to think about, but really can make the difference about whether your system implementation is long or fairly short. So the poll results are back. Says, what is your company's current status? 45% already have a proven system up and running. Great, I'm sure some of those are CoStar, given that it's a proven system and up and running. We've identified some options and are evaluating them for 22%, finding options 11%, and believe Excel spreadsheets will meet our need 22%. So the last one is a really interesting one, and I get a lot of different feedback on that. People are always asking, how many leases can we have and still do it effectively in Excel? And since we have two of our experts on the phone today, I wanted to get their opinions as well. John and Matt, maybe John, you can start. How many leases do you think you could have and still be effective doing it in Excel?
Yeah, that's a great question, Shauna. It's going to vary organization to organization and what you have, but we've seen as few as 70 leases, people looking to a tool to help them. It's just, with the number of changes, it really is kind of portfolio specific into what you can handle, I think, in Excel. If you've got a pretty common real estate portfolio and it's just less than 50 leases, they're not going to change very often. Your real estate leases might tend to be like 4 or 5 years, and so the turnover is not going to be huge. So it's really kind of a stable, not very changing, portfolio. So Excel, you might be able to kind of handle that on a go-forward basis because you might be revisiting the spreadsheet maybe a couple times a year at most. It's just in the situations where you have a portfolio and you've got a lot of dynamics and variability in your leases and you're having to revisit and change things a lot, retrospective adjustments, terminations, just things that are going to be changing around your lease portfolio is one of the things I'd encourage people to look at.
Matt, what do you think?
Thank you. I agree 100% with John. I think the complexity comes into play, and it can vary greatly organization to organization. I think another thing that really comes into play as people make this decision is the security and just the continuity of business practices. For example, when somebody leaves, maybe your subject matter expert on lease accounting goes to another department or transfers, changes jobs, even moves out of the company entirely. If you're completely committed to Excel, you probably have some knowledge that leaves along with that person, and that can really have a damaging impact when somebody makes a job change like that. And you may not know how to, or the people that remain in the department may not know how to update the spreadsheets and keep things flowing. So you could end up with a delay in month-end close in that scenario. That's just something that having a proven software solution in place can assist with. And then you have the support team. For example, at CoStar, we have accountants who work on our support team that will be available to help in that kind of scenario.
Okay, thanks, guys. I completely agree, and one other thing to remember is that when we talk about leases, we really mean assets, unless you're accounting for each lease separately. So sometimes a lease may have 100 different assets or 1,000 different assets that all have different commencement dates and termination dates. So unless you have portfolio accounting for those assets under the lease, then we're really talking about assets and not leases. So keep that in mind. We've certainly helped a lot of clients that were adamant they didn't want a software solution with our Excel tool, but then some of them start seeing the benefits of really having, as you say, Matt, that control, that security from an audit perspective, and have since gone back and implemented a tool on top of that. So it can be very onerous to keep up with if you have more than even, we're seeing companies with more than 10 leases looking at software solutions if they're, like John said, have a lot of complexity or a lot of modifications planned. Okay, Matt, do you want to take it away on the considerations beyond compliance?
Yeah, absolutely. I think we've largely, since we've talked about this transition for so many years, I remember sitting in CPE 10 years ago talking about lease accounting exposure drafts, but the considerations beyond basic compliance, I think this will quickly become the headline, and really fits nicely with the discussion we just had about using a robust tool, not just focused on the one-time spreadsheet exercise of compliance, putting an asset and a liability on the books, but what happens in day 2 and beyond. And there are many different things that can occur, and we've now that with our public clients, we're about 6 months in for many of them, the calendar year clients, and we've seen many of these items occur already, and things like opening balance adjustments. So under the standard, when you're transitioning an operating lease from ASC 840 to ASC 842, you need to adjust the opening balance of your right-of-use asset, and so our software has functionality that will adjust that balance and automatically make the required adjustments to the amortization table, and so CoStar has automated that, but that's not the only time you will use that. In the go-forward process, you will need that for things like commissions or other direct costs, or maybe even tenant improvement allowances that are paid up front. You would need to adjust your opening right-of-use asset. So it's key functionality to have. Things also occur, and we'll dive a little deeper into lease renewals in that scenario, lease terminations, but these things occur all the time with leases. You even sometimes have partial terminations. This is, for example, where you lease 3 floors of an office building and you go down to 2 floors. There's specific guidance on that. Impairments, the new right-of-use assets associated with lease accounting are subject to impairment testing rules. You have to be able to account for that. And this is another item that requires a very specific spreadsheet or amortization table change, where if for an operating lease, your pattern of depreciation of your asset changes. Reasonably certain assessments. So these are items where you said, I'm reasonably certain to exercise a renewal option, or I'm reasonably certain to use a termination option. These are things that you set up front, but then if something changes in the business and you have a key event, the standard requires that you go back and revisit your assumptions from time to time. So when something changes, it's really not a matter of if, but when something changes around your business, then you will need to make some changes to the amortization. Data corrections occur frequently. True-up entries, all accountants know we have these more often than we would like, where we have to go back and retrospectively adjust something, just because we rarely get perfect information. Sometimes things come in late. Sometimes there was a mistake made, not always in our control, and we have to close the books and then come back and true up later. Accounting workflow is another consideration. We touched on this briefly with the security and just the continuity when somebody leaves the business, or you want to make sure that you can have approvals in place to make sure that you're secure. And audit trail is hand in hand with that. You have month-to-month leases on this list. A lot of times, this is one that's doesn't occur quite as frequently in real estate, but frequently see clauses in equipment leases around at the end of the lease they switch to month-to-month status. You need to at least be aware of that and know that you may be continuing to be billed at the end of the lease, and so software can help you track that and save money in that regard. Sometimes you want to keep using the asset and maybe you even want to renew the lease. And so switching to month-to-month status and then back out of month-to-month status if you negotiate a new lease is a key consideration. And then operational insights, something we'll talk in greater detail about later. Now, specifically about the renewal scenarios or the lease modifications, including renewals and terminations, things like that. FASB listed several examples in the standard, and I'll say, the standard was over 400 pages long, and then we've had practice guides issued, and various accounting firms and experts have written guides that double that in length, and you can really find examples more than you'd like probably out there now. But I just wanted to point out that even FASB, which, in my experience, they give just enough in the form of examples, and frankly, they're usually a little too simple for actual practice. In a lot of cases, FASB will have examples with annual interest, right? And I understand why. You can't have 20 pages for one example in a FASB standard, but even FASB realized that this is the day two environment is going to be pretty complicated, and they gave all of these different examples around a modification that's a separate contract, a modification that increases the lease term with a change in classification or no change in classification, modification that grants additional right of use, modification that decreases the scope of a lease, and you can actually remeasure the right of use asset in two different ways there. And also modifications that change lease payments only. And so, all of these different scenarios that FASB listed out, and you can imagine when they're trying to save space in their standard, they maybe certainly didn't list out as many scenarios as can occur. Now at CoStar, we've seen with our hundreds of clients and their successful projects, we've been through thousands of examples at this point of just different variations on these modifications. And again, we have functionality to automate those and even automate the retrospective application of those modifications in the event that the accounting department does not get perfect information right away, which as we talked about happens more frequently than we would like. Now one other item I wanted to talk about here is really kind of a deep dive into a scenario that we're seeing occur quite often, and that's the use of a portfolio approach. And the portfolio approach is something that FASB offered as something that can ease the compliance headache, I guess, when we're thinking about adding particularly equipment to the balance sheet under the new standard. FASB said as long as you don't have a material difference in the numbers that you present, you can group like assets together and account for them under a portfolio approach. And so again, we see this fairly often in the equipment space. I wanted to run through a few screenshots here and just give you some examples around this. And of course, we're always happy to provide a live demo, run through with client-specific data, or even give you a sandbox. You could upload your own data and see what it looks like in the system. But here on the screen is just a really quick example of how things would be organized if you're at the asset level. So here we're saying we have these individual equipment leases, and and they're called out here under a supplier called Wheels Inc. You know, it's a fleet of cars probably. And you see here we've got equipment leases set up in the system for each individual asset, or each car in this case. And this would be an asset level approach. And what you would get would be an amortization table, and corresponding, you know, every month you'd have lines of journal entries related to each individual car. Now, this may be the route you want to take, depending on really how frequently they get out of sync with each other. You know, so let's say you lease one car at a time; they come on and off different dates. This may be a very practical approach. But if let's say you have a different scenario, and the slide that's coming up now would be the more pure portfolio level approach. And here we're just setting up one master lease. You know, a lot of times that's the term that you'll even see at the top of the agreement would be a master lease. And here we've identified these assets based on a serial number or some other unique identifier under one lease. And so by grouping all of these under one master lease, we can have one amortization table for an entire group of assets, and then you would just have one set of lines for journal entry at each month-end close for this entire group. And a lot of times we see the deciding factor being the dates. You know, so if you bring on 1,000 telephones at one time, you know, you're probably going to bring those into your facility at the same time, and they're going to leave all at the same time. Really probably makes a lot of sense to have one master lease and use the portfolio approach there. Now, there's a third approach that we see some clients use, and we could just call this the hybrid approach, where perhaps it's not a clear-cut either way. You don't want individual amortization tables for every single Dell computer, but you also have enough variation that you maybe want to keep them in groups. So not a pure portfolio approach, not a pure asset level approach. A lot of our clients end up referring to this as a tranche approach, where you have some way of identifying tranches or buckets of assets. A lot of times it's based on the dates that they come in service, and so maybe you have these equipment leases with several computers, in this case for the Dell example, several computers on each schedule. You can see how it's identified by schedule 1, 2, 3, and so on. And each one of these has some number associated with it, number of assets, and account for these in these buckets or tranches. I think that brings up our third polling question.
Great. Let me.
While you're getting that. Yeah, while you're getting that, I'll read it off. The polling question says, what aspect of lease accounting compliance are you most concerned with? First one, gathering all the leases, embedded leases, of course, the completeness assertion that the auditors will test. Selecting the right software for our needs, one that works and addresses all the requirements for the stakeholders. Day 2, processes and controls, sustainability, and even optimization. And will we get done in time? You need resources and budget that may not be there yet. So go ahead and answer that. I think in the interest of time, I think we have about 10 minutes left. So John, why don't you go ahead and start going through the implementation challenges, and then as soon as the poll finishes, we'll put the slides up for that.
Sounds good. All right, so really the implementation challenges we want to focus on today are kind of 3 areas, one being resources, the other being data, and the third being journal entries. And resources we can tackle in a variety of ways in terms of both, you know, internal resources and making sure people are assigned and aligned on what the objectives are, as we talked about earlier, and assembling those teams, and basically external resources to help you fulfill that. From an internal perspective, kind of like segmenting out how those resources are going to be organized, you kind of want a team focused on basically what those policy decisions are and your requirements. We talked about that earlier. You know, a team kind of focused specifically on that. Another team focused on that data abstraction component in the data collection process. And then lastly, make sure or not lastly, but also as part of that you're involving your IT team, which is also good. So you want to make sure they're involved in that whole process from a system selection and bringing up that application perspective. So making sure they're involved. And it looks like we got the results up, so we'll pause here and jump back to Shauna, kind of go through some of the results.
I think it's pretty much as suspected. The completeness always gets a lot of attention, and again, that relates to the data and how you're going to make sure you get all those leases and get the required information from them. And then also the day two processes and controls. I mean, one thing I think we've learned from public companies is that you have to think about the day two processes and controls much earlier than once the system goes live. So you need to do that in the beginning of the planning so that you're able to continue when it's really day two.
Great, thanks, Shauna. And then if you can advance 2 slides, Paul, that'd be great.
Yep.
So as we catch up on the presentation perspective, we talked about resources, working through that. The other one would be kind of lease data. The lease data perspective, we've talked about that a couple times. Basically, when it comes to data and some of those challenges, I think that the big one is I think everyone's right to be concerned from that perspective about the data. It's actually slide 23, Paul. So 2 more.
Sorry, it's coming. It's a little bit of delay for some reason.
Okay, no problem. So basically on the data side, your main areas that you're going to be focused on, just kind of three items. Basically that analysis on what you have today. Where is your information? Do you have it in third-party provider systems? Do you trust those systems? Do you have them in Excel spreadsheets somewhere, or some combination thereof? Thanks, Paul. So really that data gap analysis and understanding where everything is, and really teeing that up, and that goes true for the service contracts as well, making sure you've identified everything you have. And then once you've identified that portfolio, making sure that portfolio, all the amendments and addendums and all the paperwork that goes along with that. We talked about the portfolio. For you to make a decision about portfolio, you need that master that master lease listing, in addition to the asset listing associated with that master lease. All that information needs to be out of the gate for you to basically do data abstraction appropriately. Which gets us to the actual physical data abstraction. There are tools you can leverage to help accelerate that, but really it revolves around project management of the data abstraction, and it can be large data sets if you're working with a very large data set with a lot of assets, with a lot of information. Just making you're tracking that, and you have a process to kind of keep that information pure, because it doesn't change. This is now a process you're embedding within your organization. It's not just a one-time Charlie you're going to do for your adoption date. You have to kind of keep that thing up and running. But as you're going through that software deployment, just making sure you're maintaining that information as you go through. So let's jump to the next slide, Paul, and we'll jump to journal entries. So some considerations on journal entries. This is another big area of challenge from an implementation perspective. Just kind of decisions around, we talked about this a little bit earlier, but where your data is going to reside as you go through, and those short-term leases and leases below materiality threshold. Are you going to leverage a tool for that? Thinking beyond just the compliance of the right of use asset, what are you going to do with these other items? Some of these have disclosure impacts. How are you going to get the information needed to satisfy your disclosures? You're going to leverage a tool, you're going to leverage your GL, but thinking through that. I touched on this a little bit earlier on the non-lease component side. Is that something you're going to want to leverage a tool to help you assist in tracking? If you're going to leverage payables to pay leases, obviously you're going to need that non-lease component item in your tool, or you're selected if you're looking to actually just move beyond just compliance. And that gets into looking at how your invoices and your PO systems are structured. Working with your providers, and we're seeing a lot of pushback to upstream to providers to get more information. Separation of invoices, things that, those variable and fixed components, those being clearly separated on the invoices. So we're seeing some pushback in that direction upstream to various vendors and providers to get more information to assist with this overall reconciliation challenge. So something to think about as you're jumping through these, really kind of like down to the invoice level, kind of how are those going to work. All right, let's jump to, and I think that brings us to the TAccounts from a CoStar perspective. So Matt, I'll hand it off to you.
Yeah, thanks, Sean. And this is, again, another just very practical look into the process and something that at CoStar we provide for our clients. Up top you see just a really simple amortization schedule example out of the system, then translated using formulas to TAccounts, and ultimately into an example of what you'll see in an integration into a general ledger system. So it's just very practical step-by-step process here, and you can probably tell this is done in Excel. So even those of us that live and breathe by Excel, you don't give that up entirely as you implement a software. You even get to work with that and look at some TAccounts as we go through that process. And another, just a real quick example here, we promised some operational insights into the business, and this can really help you achieve some buy-in from your stakeholders. And one example I have, when I worked at Home Depot, we had a bunch of forklifts, and so just to use round numbers, let's say we had 20,000 forklifts. Once we started to organize our leasing data, we realized we're leasing 20,000 forklifts, but 25,000 forklift batteries, and it just turns out that there had been a mistake, per John's point about the AP data. There had been a mistake along the way. The vendor was billing us for too many batteries, and so we were able to clean that up. So that not only helped us get some buy-in from our operational partners in the business and save some money, and ultimately achieve some a win for the entire company by adding some money back to the bottom line. Now, one word of caution. This relates back to the info that Shauna gave in the very beginning of the presentation about GASB considering a delay for private companies. The AICPA actually is one of the organizations that requested GASB consider that delay, and one of the reasons they called out, I'd say notably, was that some software vendors were not ready for this transition. There were errors in their software, as you can see there highlighted with the red box, and I think that's just a function of some solutions, rushing to market when the final standard came out, as opposed to CoStar. As I mentioned, we've been through hundreds of successful transition projects, and have had clients even give us feedback that it was easier than they thought it would be. RGP has been with us along the path with many of those, and we're really proud that we've had such a successful track record and have been tested by really all the major auditors at this point, and we're holding up very well. So I just say that, this is a caution here that it's called out prominently in some of the discussions that are going on right now at a national level, that software vendors are not prepared. However, CoStar is prepared, and we're ready to help you across the finish line. And I'd say just make sure you get started early. We haven't had anybody tell us. I know John and Shauna, you'd probably agree. Nobody has said, "Oh well, we started too early. We're done faster than we wanted to be."
Oh, that's absolutely right. It takes longer than you think. So we have one last polling question. Thank you for that, Matt. Last question is, how does your organization plan to interact with auditors for ASC 842? So maybe, I know some of you have already implemented. I think there were 40% of the people that have already implemented, so probably already involved with auditors. But the first option is, we've discussed our project plan and policy with our auditors already. We plan to review our project plan and policy with our auditors. We're getting accounting feedback from other internal or external sources, and will interact with auditors during the audit, or we're not sure yet. So obviously the audit is very important from a compliance perspective, but even more from the operational that we've been talking about. This is a great time, as Matt and John highlighted, to really think about why you're leasing and where you can streamline and really save the company money. What should you be buying? What should you be leasing? how to implement practical approaches as opposed to completely technical, maybe the various conventions that now that you have a good handle on your lease portfolio, you can make some more materiality type decisions. Think about how often you're updating your incremental borrowing rate and at which tranches. The more you can automate, obviously, it's going to make it easier. So as John mentioned, the more you can get into the system, whether it's even immaterial leases or short-term leases, the more control and clarity you'll have. And speaking of controls, from a SOX perspective, make sure you analyze which ones are really preventive controls versus detective controls. You want to have enough control in there to get the results you want, but you don't want to cripple the business. I mean, that's one of the reasons that leasing is such a great tool. So looks like everybody's really on their way to discussing with their auditors, which is great. And since we are at our time, I apologize we don't have time for the questions, but we have had some submitted. We will get back to you individually on those questions. Please check out the website, CoStar's website and RGP's website for additional information on leasing. You should be getting a survey to fill out for your CPE credits, and then your CPE certificates will follow. Please join me in thanking our panelists, John and Matt. Was great information, and I'm sure will be very helpful to companies that are just getting started on this and those that have implemented. So thanks a lot, everyone.
Thank you.
Thank you.